Hey guys, Mike here. So in today's video, I'm talking about just how much Jerome Powell and the Federal Reserve is our daddy. Yes, I said it. Our daddy, that's right. Because they run our life if you're an investor. They own the stock market, right? I'm gonna show you exactly how much they own the stock market, how much they owned it for 10 years now, and how Jerome, when he implemented his first game plan, when he got selected to be the Fed chair, was an absolute disaster. But it also opened a lot of eyes to see, like, wow, the stock market don't go without Jerome, right? Where Jerome goes, our investments go, okay? It's as simple as that, all right? And obviously they're meeting this week, so everybody's on pins and needles going, oh my God, what is Jerome gonna say? And so you saw that today. We ripped and roared Monday, Tuesday, all of a sudden it's flat today. I think it's most likely to be flat the rest of the week until we hear something out, whether something leaks out of there or whether Jerome actually speaks. So, I'm gonna take you through what to me should be eye-popping. If you've never seen these before, you should go, woof, didn't know that. And just how much they control this stock market. So when you think it's a free market, I'm going to show you it is not a free market. The Federal Reserve is not just putting their thumb on the scale, so to speak. They're literally standing on the scale, of which actually either turns the market down or turns it up, okay? And while everybody, especially the institutions, are really taking a step back right now and going, hey, what are they going to do? Because what they do, they're the captain of the ship. They're steering this whole thing, okay? And I'm going to show that to you, and hopefully by the end of it, you can go, yeah, I get that now. Why everybody keeps talking about the Fed, okay? So before we get into it, don't forget, if you want to open an account with BlockFi, hit that link down there in the bottom. You can open up the new credit card they got right there and earn Bitcoin on every purchase, which is what I'm doing right now. You can also earn interest on your Bitcoin or Stablecoin, is actually what I'm doing. I actually park some money there just to earn 7.5% on it. And I also earn money on my Bitcoin, on 4.5% on that. And so take advantage of that and use that link down there in the bottom, guys. So having said that, let's go ahead and get into why Jerome is our daddy. And so obviously we know we got tapering coming up here, guys. And I actually found this article dated January 4th, 2018, which reads, how will markets react to central bank tapering in 2018? And it goes on to say real quick, 2018 is expected to be the year of tighter central bank policies through shrinking balance sheets and rate hikes. It's going to be interesting to see how central bank policies affect equity markets and the economy. The Fed's QE policy is monetary stimulus, but most critics claim it just pumps up the stock market. Hallelujah, yes it does. And to depict what I'm saying, right here you see this graph right here where this is the S&P and then the assets that are being purchased by the Fed from 2008 to 2021. Okay, the S&P picks up around the mid 2011. So as you can see, from 2013 to 2015 or 16 actually, as the purchases went up, the stock market went up, right? And then all of a sudden in 2017, they announced at the end of that, they're going to start, doing quantitative easing by raising interest rates and then lowering the balance sheet and letting those old investments fall off the balance sheet. And as you see right there, what ended up happening? Volatility galore happens in 2018. This was when Jerome Powell took over. It was in February 2018, I believe it was. And as you can see, major sell-off, major correction, and then another major sell-off right here, all in about an 18-month span is when this actually happened. And they said, holy crap, this ain't working. We got to start, basically buying back more assets. So then they started repurchasing assets, and what happened to the stock market? It started to go back up, and then of course we hit the crash. And to take a closer look at this is what happens on that same chart, just so you can actually see it better here. The first one was an 11% correction right there from January 25th to April 4th, so it lasted quite a ways there actually. Actually, it lasted till May, we thought we were out of it, and then it actually did a head fake on us. Then we go into this major correction of 20% from October 3rd all the way down to December 27th. So you see, half the year we were in some kind of correction in the S&P when this was going on. Okay, that's how the market reacted to it. And if you even look at 2018 as a whole, we actually lost, the S&P lost almost 8% for that entire year. It was negative, which is very rare for the S&P. And so you look at 2019, as we went into 2019, didn't take long. There's another sell-off right here from April 29th to June 3rd of 7.5%. Then we get another sell-off from July 29th of a little over 6% to August 26th. And then not long after that, we go into another sell-off of 5.5% from the 23rd to October 28th. And then they finally say, man, we got to start repurchasing like crazy. So they start increasing the balance sheet again, lowering the rates again, and magically the stock market rises. And as I said before,
who's your daddy again? Who's your daddy?
He's your daddy. He's my daddy. Why? Because my investments in the stock market go up when Jerome allows them to go up. And when he wants them to come down, they come down. That's the way it is. That chart right there alone, forget the rest of them, should show you how much the Fed owns this stock market since '08. They didn't own it before. They own it now, and they own it from here on out, right? They know this market cannot support itself. Not just off fundamentals and earnings. Can't do it. You need a whole lot. That's why you see a lot of companies increasing share buybacks right now, which is what was going on from like 2012, 2015. Also, because the earnings and the growth just isn't going to be there to support, keep moving up at this rate. Okay, it's not going to happen. But here's the kicker: everybody keeps talking about the interest rates, and I was kind of worried about it. Oh my God! So this might be actually a good news here for growth stock investors like myself, because the Fed is trapped. They cannot raise interest rates like they used to be back in the day. They can't do it. And I'm fixing to show this to you. And I found somebody explain it much better than I can.
One of your main points of your thesis was that interest rates cannot go up to historical average levels. Let's say 5.7%, which is what we were before. Let's just take 5%, for example. You told me that at $30 trillion of debt, national debt, a 5% interest rate would imply a $1.5 trillion interest expense payment every year, which would bankrupt the Treasury.
Okay. I'm still firmly in that camp. I haven't changed my view at all, Dave. That interest rates cannot go up materially.
They cannot
at all
go up.
From
okay.
Here. Yeah, because
so the market's wrong.
Yeah, I think the market is adopting the same playbook for the last 40 years, which is, economy improves, Fed raises rates. But if you look at the last 3 or 4 downturns, 01, 08, every time, even 18, every time there's a downturn, the Fed tries to raise rates, and they're able to raise rates ever lower amounts without the market imploding. And so if you look at a 40-year chart of rates, you see this down 40-year downturn.
And guys, again, I'm a visual person, and I hope you are too. So look, here is the Fed funds rate historical chart right here. And look at this. From 1980 on, it is nothing but a downward trending chart, just like he said. And what's even crazy, look over here to the right, where you'll see there around between 2017 and 2019 where they tried to raise rates. Look at this, barely over 2% now. Is what they tried to do. Okay, they kept it at almost zero from 2000, from the basic '08 crash to around 2016. And look in more detail. Look at this minuscule rate raising. Right, we go basically from like 0 or about 0.5% actually to around 2.43% was the top. Before, look what happened. They had to start decreasing. Even before the crash, they had to start decreasing the rates again to try to get the stock market to pump back up.
Because they're piling on so much debt that their incremental rate increases are ever more painful, like you just straight with that point there. At $30 trillion of debt, at 5%, it's $1.5 trillion. The U.S. government took in $3.5 trillion of revenue the previous year in 2019, the best year ever before the pandemic. So that would simply bankrupt the U.S. Treasury, the U.S. government, right? So they're really pinned in a corner. They cannot raise rates. The market thinks economy gets better, rates go up, I sell gold. They're not factoring that in 2008, we had around $10 trillion of debt. Today we have $30 trillion of debt. $20 trillion more debt. So the capacity and it could barely raise rates after 2008.
And so in a way, this is kind of good news for growth investors like myself, or for you if you're in growth investment, because you know what? Maybe it's not going to be as big a hit as we thought it was going to be if they start raising rates. That was the big thing. Oh, the growth stocks are going to get pummeled when they start raising rates. Well, good news is a lot of people think they're going like to 5%, all this crazy mess, like back to the historical rates. I showed you, that's ridiculous. They can't do it. It's impossible for them to do it just because of the debt we've taken on. Like you said, we've tripled the debt in 12 years. All right, it's at numbers that we can't even fathom, right? And so they're trapped in a corner. So for growth investors, you may say, hey, it's going to be a hit, but maybe not as big a hit as we thought. Plus, they're already beat down. You kidding me? High growth stocks are in the toilet. I mean, they're on the ground. Some of them are even under the ground. You can't even see them anymore. Okay, especially if it's like a SPAC or something. You can't even see them anymore. And so there's 2 camps now saying, okay, if when they announce a taper, we've realized we're going to have a pullback for sure. It could either be just a sell-off or it could go into a correction. What are the active money managers going to be doing? Because they can't just be sitting in cash. They need to move that somewhere, right? Well, if you're looking at small caps like the Russell, just been beat down, right? I mean, why not? Because they can really move those stock prices, right? We're talking about hundreds of billions of dollars. If we're rotating the small cap and mid cap markets, those stocks would just fly. you know, and they make a bunch of money in the meantime on doing that. And that's what some people think is going to happen, right? And to me, I'm kind of thinking, yeah, why not? You know, certain stocks are still going to get beat down, but it's like if you're already down 50, 60, 70%, right? And you're an institution, you're holding billions of dollars, you say, well, I can get this stock over here for 10, 12, 14, 15 bucks. And I know just by me putting my money in, there's so much money going into it, it's going to fly, right? And I'm going to make a killing on this, right? And then, of course, the retail investors will FOMO in, and then when they're done FOMOing, I'll rip the carpet off underneath them and take my money. But why not? In the meantime, while the sell-off's going on for, you know, whatever, 4 to 8 weeks, whatever it might be, 12 weeks. And I'll show you by the chart that can happen. And so, you know, that's something to think about. But just understand, look, this whole thing, I'm tired of hearing people talking about how this is a free market. That's ridiculous. No, but how does anybody look at those charts and graphs and say, oh, yeah, you know, the market's a free market. It does what it wants to do. Give me a break. Like, what the Fed is steering the ship, folks. And that's why everybody is sitting on pins and needles this week, waiting on Daddy Jerome to say whatever he's going to say. And don't forget one thing. This dude's coming up. His tenure is up. I think it's February 2022. And so, you know, he's got, what, 6, 7 months? You don't think he wants that second term? Okay? You don't get a second term by the stock market being in a toilet. Okay? Because don't think the president and all those other people and politicians up there, their money's tied up in the stock market too. So if Jerome tanks it and loses them money, he's out. Okay, so don't think politics don't play into some of the decisions coming out of the Fed, for example, because a lot of people are saying they missed their window, right? Like, I don't talk about detailed stuff on inflation because guess what? I'm not, you know, some economics professor or expert on that, but I'm smart enough to go listen to experts on it, people who I highly respect, who do it for a living. And the one thing all of them say, they may disagree whether it's transitory or all this other stuff, but the one thing they agree on is this. Inflation is one of those things you have to get ahead of. If it gets ahead of you, it is like trying to put a genie back in the bottle, catch a tiger by the tail, whatever you want to say, all right, and it's hard to do. And so some people already say, I mean, the expert I've listened to, so they already missed their window, and they need to start now, like sooner rather than later. So some people in one camp are saying this week, they think they're going to shock everybody and come out and actually say, we're going to start tapering, right, within the next couple of months or something. And then, of course, the other camp, who I'm actually in as well, because I think Jerome wants a second term and politics plays into this. And, you know, they really are limited what they can do. And they don't want to, you know, have the market go into a 20% correction, are just going to sit there and give lip service and whatever and say the usual crap. Okay, and they'll say, oh, we'll start doing it in 2022. And so, you know, and it's just one of those things because whether you like or not, inflation is here. I don't care whether it's transitory or not. It's here. You see the prices, right? And so, you know, something else to look at is where are rich people putting their money right now? Gold prices started popping off this week, got above 1,800. Real estate prices are going through the roof. That's two areas you go if you're concerned about inflation, to hedge, okay? And so that's something to look at. A lot of people are buying bonds right now, which shocks me because with inflation, you're actually at a negative rate. But a lot of people are buying bonds right now. And so it's like, wow, why are people buying bonds? I haven't got an answer to that one yet. But, you know, it's one of those things, if bonds become, the more attractive they become, if rates start to go up, and when it does happen, and bonds become more attractive, the stock market has no choice but to go down, right? It has no choice because right now it's the only game in town besides crypto, right? But remember, the bond market is way larger than the stock market. And it's just been, you know, hadn't been part of the game for a while now.
This next chart shows Fed's ownership of treasuries. Can you break that down for us?
Well, it just shows you the extent of intervention by the Federal Reserve. The bond market, the bond yields in the U.S. should not be 1.3 or 1.4% on the 10-year today. The only reason why they're 1.3, 1.4% is because the Federal Reserve has bought 25% of all the bonds in circulation. So that's, you know, round numbers, $7.5 to $8 trillion of debt that the Federal Reserve owns. That means they are the buyer, not of last resort, they're the buyer of first resort. They're buying almost all the debt, the new issuances that are coming out in the market today, because no rational investor would buy a bond for 10-year yield at 1.3% when inflation came out this week at 5.5%. You're basically a negative 4% real return on that bond.
But that's going to start changing over the next 6 months. And remember, the stock market looks 6 months ahead. So you have to be looking 6 months ahead with it. All right, that's why this is not a fear video. It's me just like putting this out there too to go, oof, okay, and to get a couple things from this video. And so, you know, and so what I want you to take from this video, one, Jerome Powell is your daddy, whether you like it or not. He's my daddy too. The Fed owns us, and they're in charge of our retirements, and whether you like that or not, if you're in the stock market, that is. And, you know, the other one is eventually Yes, they're going to announce it. When they announce it, most likely you'll see what you saw in 2012-13, which was a 6% sell-off, maybe up to 10% sell-off. Maybe you see a correction, right? When they announce, there's a difference between announcing and actually doing, okay? And so that's one thing to take into consideration. When they finally start doing it, and God forbid, like I showed you the chart or the graph there, if they start actually trying to shrink the balance sheet, that's a whole different animal there. But the good thing is, if you know they're going to announce that or start to announce it, you've seen the playbook. You've seen what happens, right, in the past, and history repeats itself, okay? So that's what I want you to take away from this video. Go, okay, I can be prepared for this. This is okay, right? Because if you're prepared, it's way less scary. It's way less nerve-wracking, right? Because for me, I love sell-offs. I love corrections. I don't know why people don't, because especially when we get all-time highs. Like, I want to be able to buy stocks cheaper, right? That's just me, and you should want it too. It's just being prepared with, you know, cash on hand, ready to be deployed, hedging your portfolios, all that stuff is really not that big a deal. But I'm big on education. I'm big on teaching myself, and when I learn stuff, I'm gonna be teaching this to my son. I put videos out there for those who want to know stuff about this stuff. If you got something to add, please put it in the comments, because I am obsessed with, you know, constantly consuming knowledge and learning things I don't know. It doesn't bother me to say I'm one of those guys to tell you. If I don't know something, I'm gonna say, guess what? I don't know. And so, you know, I'm one of those guys, so please put in the comments, put sources if you have it. I'd love to know it. I like to share it with the community. I want everybody to know it, because, you know, that's how we get better. We just teach each other. We help each other out, right? That's what we are, a community here, okay? And so, anyway, hope you got something out of that. I'll get off my soapbox now, and hopefully I'll see you guys tomorrow. Hit the like and subscribe button. I really appreciate that. Help support the channel and get the video out there and beat the algorithm. Also, don't forget to hit that link down the bottom if you want to account with BlockFi and get one of those credit cards and start earning some cryptocurrency, which is on fire right now. Glad to see that. Anyway, hope you guys have a great day, and I'll see you later.